right. Thanks for joining our fifth installment of the 2020 WASDE Preview with our special guest, Scott Shellady, also known as the Cow Guy. Probably could have told that by just the get up that he's got on. But yeah, you've seen Scott on agriculture.com before. I know that's where I see him almost every day when I check the news. Just kind of recap what we're going to be doing today, same as it always is. Just a quick little introduction here. Then I'll kick it over to Scott, and he'll do kind of an update on what's going on in ag markets, what he's hearing, and what's burning for him these days. I'll transition into a preview of the WASDE numbers. We've got some interesting stuff going on right now. A couple new products that we're launching. So in addition to the yield estimates, which we've always kind of provided on these webinars, we're also going to be launching or soft launching our production estimates, and then our acres harvested estimates for the first time. So that's kind of like an exclusive to the live stream today. We're going to be rolling those out into production and as an official launch later this month. But yeah, we're excited about those, and I'll give you a sneak preview of what's going on there. And then I'll be doing a Q&A with Scott, just getting his a little bit of information on his background, hear his story and how he got involved in the market. So that's basically it. And without further ado, we'll get started here. Scott, a little introduction for you. Scott's currently with Ag Optimists, and he's known internationally as the Cow Guy. Frequent contributor on Fox News, CNBC. I'm sure you've seen him before, and an expert in basically global commodity markets. Currently working at Ag Optimists, has deep expertise running execution and futures divisions for some of the largest global players out there. Previously Deutsche Bank, Mizuho, PAT Systems, a software provider in the space, and then previously at TJM as well. So Scott, great to have you on, and thanks for joining us today.
Yeah, you make it sound like I've been in business for 75 years the way that sounded, but no, it's been a great 32-year run. I hopefully have some more, but these markets and this world we are now trading in is even ever more difficult than it was back in the day. And I would probably say this to start off. I cover all three of the major things. We do equities, we do fixed income, and we do the agricultural markets, because there was a time back when my father was in the business. He started in 1962. You could be a corn expert and only know corn. But the world's gotten so big and the money flows in between in and out of these products that, especially like on a WASDE report day like tomorrow, you can't just be a corn expert. You have to kind of know what the equity world's doing. You kind of have to know what the dollar and foreign exchange markets are doing, as well as your little niche. You can be a niche guy, but you can't ignore the rest of the world. So it'll be interesting to see how the rest of the world may play into tomorrow's numbers, as well as how tomorrow's numbers play into the rest of the world. And then you kind of have to wrap around that the fact that we're in the middle of a pandemic and in the middle of an election, and you kind of have to, there's a gauntlet you have to run as an investor or a trader.
Yeah, oh, absolutely. It's changed a lot over the years. So what are you hearing, or what's your view on the market? What are you expecting to report tomorrow, or are there other things that you're looking at these days?
As you get closer to the end of the year in the ag markets, the guess of where, or the estimate, I hate how they say guess, or the estimate of what we're going to have as far as yield and production and carryover, that volatility should decline, right? We should get a better feel for it as time goes on, and generally speaking, that's the case. This year, obviously, we've got the pandemic that's thrown a wrench into things, and now we have a family farm up in Northwest Illinois, which I go to frequently in the summertime. I also am currently located in Northwest Indiana, and I spend a lot of time in Illinois, Iowa, and Indiana talking to farmers. I talk to a lot of farmers, and I've been traveling extensively over the last 3 weeks. And I would say, generally speaking, we had that, what they want to call the derecho in Iowa. And I don't know about you, but everything really could use a little bit of a drink around here, right? We've been kind of short on water. It's not really hit the headlines as much as I would have expected it to, but it's definitely taken the top off of things. So in talking to the farmers, they're going to back their yield estimates off a little bit. We're going to back the production, off a little bit, and then obviously that'll take, in the carryout, that's going to make a big, not a big difference, but yeah, it could be a big difference. It depends on what the USDA accounts for tomorrow or not. But it's definitely not been a great growing year. It's, you know, the older I've gotten too, though, it seems as though these hybrids are healthier and stronger than they ever been before. And I just feel like sometimes we can grow corn in a glass of water, and we can also grow it on the sidewalk, right? So a lot of times these weather estimates and these estimates of precipitation, while they're all very good, affect the plant less and less. They do affect it, but maybe not as much as they would have in 1930 versus year 2020.
Right.
So in speaking to the guys and seeing and being in the fields myself and seeing the bean pods and what's happening with corn, yeah, it's definitely going to take the top off. I definitely think these numbers will be reduced a little bit. I don't know what your numbers are, but I think that should be the expectation. Now, if we meet the expectation, I kind of feel like that's going to set the tone for maybe this market to grind higher. Believe it or not, I can't believe I'm saying that, but if we get some sort of bullish number tomorrow, that'll probably underpin where we're at, and we can probably take off a little bit from there. But then I just get a little nervous, because when all of the farmers and the guys I talk to think that we're going to get a big number tomorrow, and I mean a small number tomorrow, they're going to see us rally. A lot of times the USDA over the years, I'm just saying, they've thrown it in your face, and we've kind of really gotten hurt on days like this. So the only reason why I'm a little leery is because the farmer's bullish, and I love those guys, right? We've got a family farm, and we still farm our land, but it just seems like when you get too many guys on one side of the boat, you know, the boat tips over, and I just would like to see us at least underpin the move we've had as of late. We've done very well as of late, and see if we can use this as a little bit of a springboard going into harvest to get some better prices.
Yeah, so you see the potential for the USDA to revise down from last month. I know last month they bumped up their estimates, which have been pretty steady throughout the year. And yeah, last month was kind of the first time they made a significant increase to those. But you might see them walk that back a bit.
Yeah, well, just anecdotally, I mean, you know, I'm not a, you know, pro farmer progress tour kind of a person. I don't go out there and look at everything, but my customers, the guys that I talk to, the people we see, you know, talk in the cafe or talk in the tavern, it just seems like things have just come in a little bit because of the weather and because of some of the damage that we've had. It's a big country, don't get me wrong, and that doesn't mean that other parts of the country could have done much better, and that will make up for it. And the USDA should be the ones that should know that, and they should set us straight. But you've seen the disappointment sometimes where we get the USDA comes out with a much bigger number than anybody ever could have imagined, and we take 40 cents off the market right away in corn. So, you know, like, again, anecdotally, I'm talking to the guys I talk to, they're a little defensive, and they think that this thing could have some legs. You know, and the only other thing that really kind of maybe would stack up in their direction on that is the fact that we've technically done some good work here. I haven't seen the close yet, but I know that we did break through that 200-day moving average in D's corn, which is a big deal. If we can settle above there, I don't know where we settled, but that 362 level, I know a lot of guys were looking at. Technically speaking, to make that move the day before a report, you know, that could be constructive, right? That doesn't normally happen that way. So I'm really interested to see what we get tomorrow.
Yeah, no, that's interesting. I mean, we'll get into our estimates in a minute here, but certainly, yeah, we're not as bullish on yield and not even overall production as the USDA is. Obviously, those are related, but yeah, who knows? Who knows what we're going to see? You talked a little bit earlier about, you know, all the markets being related. I mean, what are you seeing in other markets that you know, potentially have a read on ag these days?
Well, I mean, the other one that probably would have affected the most, they all affect it, because, you know, you've got capital that moves around, and the fund managers, you know, a lot of times they don't know it's even corn, but they're trading the way it looks. They've got something that they see as far as a setup, chart wise or technically speaking. So you have to know where the money's going, so you're not dead right, you know, because you could see it could be hot and dry out there, and you could think that the corn crop's being killed, but if equities are tanking and big funds have to exit their corn positions to pay for their losses in the equity market, you're going to see corn trade lower on a day you think it should be limit up, right? That's what you kind of have to now deal with these days. You know, everything's more transparent, technology's a lot better, information flows around a lot faster than it ever used to before. Sure. That's a great example of why you kind of have to have your eye out for everything else out there, because you can't just be, like I said, a corn specialist. So I would say the first one will be the FX market and the dollar has gotten precipitously weaker. It's helped anything that's traded in dollars because it's going to be making it cheaper for our customers abroad. But that's something you should know, and it's in percentage terms, it's been a decent move lower in the dollar, so that's going to build some sort of support in anything that's dollar denominated. Although the things that are, if you look as of late, we've got an oil market that's kind of fallen out of bed. There's other reasons for that though, but you have seen in the ags and proteins, I would say a little bit of a supportive nature to that because of those FX markets. We've also seen some volatility enter the markets, especially over in the equity markets. So you might see a little bit of this defensive play and other things in FX and commodities because of all the damage that may or may not be, being done in the equity world. So they all are related. They all at times take center stage. But I would say, because of the time that I've been in the markets, in 2008 we had a commodity-led turnaround, right? And that's when things kind of reached their bottom. Commodities started to take off, and so did everything else. So I'm looking for commodities, and the row crops in general to start to lead the way here. It'll be interesting to see if we can finally get some gains, because it's been the most inflation-proof product I've ever seen in my entire life. You've got this, 1 acre of land. Then in 1930 was averaging 30 bushels of corn per acre, and now I think we're expecting around 180 bushels of corn per acre, depending on what you're following right now. That's a massive increase in the same plot of land. Yep. That is my definition of deflation. So it's been tough on those guys. We'll see if we can build a base here and get going.
Okay. And then any thoughts on, the current polling numbers, Biden versus Trump? I know, Biden was looking really strong a month ago, but it's kind of tightening up. Like, do you have any read on what that could mean for, foreign trade policies as it relates to, grain and what the impact on price could be there?
Yeah, I mean, I'm not afraid to have an opinion. I think, where I currently am in Northwest Indiana, most of the people around here are blue collar union workers. And I nailed it in 2015 while I was asked by another network about who I thought was going to win. And I said, Donald Trump, because you go to the local eateries or taverns around here, if there's 10 people that work for the unions of British Petroleum or U.S. Steel or ArcelorMittal Steel, they should be, they always have been Democrats and supporting Hillary Clinton at the time. Well, 9 out of 10 of them said, no, we're supporting Donald Trump. And I thought that was a sea change. And so when I said it in 2015, I think Donald Trump's going to win, I was almost laughed off the stage. But I would have to say this time around, he hasn't done anything to upset those people. I mean, it's been a little bit of a rocky road every now and again, and I think that this time around, he's going to get a lot more minorities than anybody could have ever expected. And I think Donald Trump has never polled well. People don't like to say they like him for fear of reprisal or repercussions of what a Donald Trump supporter might get from that, and they don't especially want to share that with a pollster they've never met in their entire life. So sure. I think if you go internationally, there's markets, right? You can trade this Biden versus Trump, and they're leaning towards Trump, and I think the equity market is too. I think it's, there's not as much volatility as you might see if the equity market thought Biden was going to get in because of his $4 trillion tax plan. So I think that the markets are kind of telling me it's sniffing a little bit of a Donald Trump win. The international betting exchanges are sniffing a little bit of a Donald Trump. That doesn't mean it's going to happen, but that's how they're setting up right now.
Yeah, interesting. I mean, it's we'll see what happens. Certainly, there's going to be an impact to our exports and any regulations around that. But yeah, it's going to be maybe closer than people think, right? It certainly wasn't as expected last time, and the numbers are kind of all over the place. And the only thing that you can guarantee that people can fudge numbers with are statistics, right? You can have those read any way you want. And if I look at like the polls from 538. Their confidence intervals on their Biden victory are quite high, and I just don't think you can rely on that stuff the way that you could in the pre-Trump days, right? You just never know. It's so volatile. So.
Right, and I think the only thing that would really hurt us, believe it or not, is a no decision for 2 or 3 or an extended period of time after the election. I think that'd be the worst outcome. I'd rather have one or the other win it outright and have no question, so that we can begin to plan. because markets hate. Doesn't matter what you trade, ags, fixed income, or equities. Markets hate indecision or not knowing, and that would be probably the worst outcome.
Yep. No, and nobody likes uncertainty. Yeah, so kind of with that, I'm going to do a little preview of our predictions for tomorrow's WASDE numbers. Again, our numbers are end of season estimates, so we're not looking to predict what the USDA is going to come out with tomorrow, but what we expect for end of the year. And then after that, we'll get into a little Q&A with Scott, and we'll get more detail on his background and kind of wherever that takes us. So let me just share my screen here. Yeah, so here's our preview for tomorrow's WASDE figures. Our yield forecast, right? So USDA raised their figures last month in the WASDE in the August report, and those are due to be updated at tomorrow's release. Corn was raised from 178.5 in July, which is pretty much where the number was all year, to 181.8 bushels per acre in August. Beans was also up on a percentage basis much more dramatically, up to 53.3 bushels per acre, up from 49.8 in July. So pretty material increase there. Certainly if some of the stuff that Scott was talking about comes to fruition, there's probably a bit of downside in terms of like the bushels per acre that they put out. We put out our first figures for September last Tuesday, and we're at 178.4. That's up pretty materially from August, where we were at 174.8, right? So we're basically looking like we're a month behind the USDA. But that being said, I don't anticipate us going much higher. Our numbers on the yield side probably aren't going to change that much as we head towards the end of the season. But yeah, I mean, we're basically right in line with what they had in July, and we'll see what they do with their next report here tomorrow. Beans also up on our side, 50.5, up from 49.2. So not the same sort of dramatic jump that we saw from the USDA, but certainly an increase from that perspective. So since last week, we haven't changed our forecast, right? So we rely on geospatial intelligence. We're getting satellite readings of crops in the ground, and not a whole lot has changed for us. So yeah, and I don't know that that's going to alter through the rest of the growing season either. So 178.4 for corn and 50.5 for beans. We've got another free report coming out next Tuesday, so you get an update on that after the WASDE figures, and maybe they revise down and they're a little more in line with us, and maybe not. But yeah, there's a decent delta there, particularly on the bean side, that it'll be interesting to see how that plays out. Now, this is something we've been excited to release, and like I said, this is rolled out. All of our clients who subscribe to Commodity View get access to this data already. It's in there. We haven't officially launched them or announced the production forecast and area harvested forecast, but it's rolled out. It's in production. We are calculating these figures every day. So this is kind of like the first sneak peek that anybody gets to see of this data. We're really excited about it. We feel good about our numbers, and yeah, hopefully our users can make use of those. So as you can see on the left, I got that table there. That's corn on the left. I didn't put a label on there, but we're looking at 84.7 million acres harvested versus USDA's 84 million acres. So we're a little bit higher than them on the harvested acre side. But we're a little bit lower, as you can see, and I showed you on the previous slide, for the actual yield per acre. All in all, from a production standpoint, they are slightly higher than us at 15.2 billion bushels, and we're right at 15.1 billion bushels. So we'll see what happens, whether they come down on yield or they remain kind of locked in on their area harvested. But yeah, it would seem that there might be some downside to those production figures from the USDA tomorrow. Then in terms of beans, so we're right in line. Area harvested, we're both looking at 83 million acres to be announced tomorrow or for the end of the season. Yield per acre, like I showed you on the previous slide, we're a bit below the USDA there, about 8% below them. And then on the production side, we are slightly below them there with a production of 4.2 million bushels, or 4 billion bushels, and USDA is expecting 4.4 billion bushels. So yeah, all the data is available in Commodity View Pro. You can reach out to your sales rep if you're interested in taking a look. Free trials are available, but we've got all sorts of cool data there, and we're only adding to it. So, in addition to producing this sort of stuff for the U.S., we're looking at rolling it out into Canada in the near future, and really any other geography that's a major grain growing region. So I would expect in 2021, we're going to have a lot more information like this we can provide our users. And then, that any incremental value that we provide is completely for free to our existing subscribers. So there's no upsells or anything like that. It just kind of comes with the product. So really cool stuff. And then of course, we make these estimates and forecasts available for free to really anybody that signs up to our free crop production report. My link didn't really show up there. It's in white, but you can just go to barchart.com/CMDTY, and under the resources section, you'll be able to find our price reports. You can sign up for the price report there. Starting next Tuesday, we're going to have these production figures, the acres harvested figures, completely for free. Twice a month, you'll be able to get those on the first and third Tuesday of every month. So really cool tools that people can use. And whether you want to get them for free, 2 times a month, or you want to get updates every day based on, what's going on geospatially, we have a solution for you. So, you get the production and the acres harvested in addition to yield. And then, of course, Commodity View allows you to view these prices or these values estimates any way you want, right? You can put them in a quote board, you can chart them, you can put them in a map, you can have the map play those values over time so you can see how things change throughout the growing season. But, that's what we're focused on, is making, our data and tools available to, all of our users. So with that said, transitioning back to Scott here, any thought on those, the numbers that we put up?
Yeah, I mean, I would tend to agree. I think that your numbers look, they look pretty good to me. I mean, you're not crazy, and I think they're probably very measured, to be my first initial response, but is the word measured. I just, sometimes you can get a little bit of your backyarditis, right? What you see going on around you doesn't necessarily mean it's happening to the rest of the country. But I do think that those numbers that you came up with for your bushels per acre for both corn and beans and the expectations of the total crop production, I think are probably where I would feel comfortable right now. I think if those numbers do come out to be true, I think that the market would digest that fairly well, and then maybe we can attack onto the gains that we've seen as of late. So only tomorrow will tell, but I do like what you guys put out. And just as a quick plug to you, I'm not being paid for this, but you guys have got a good product, and a lot of people should know that by now. And you're making some headway, and you're competing at a good level. So I appreciate being on, but at the same time, it's also an honor being on because it's good stuff.
Yeah, no, really appreciate it. We try to do a lot for our clients. So no, appreciate the plug, if you will. We keep making the product better and better. So we're excited about where we're going. So yeah, getting back into your stuff, Scott. I'd love to hear the whole story, how you became the cow guy. How'd you get into the markets? Like the whole kit and caboodle, if you will.
Well, it's a pretty quick story. I mean, 1962, my father took a job with Cargill out of college. He was a college football player at Drake. I played college football at University of Colorado, but he took a job from Drake in Des Moines, Iowa with Cargill, and he did well enough that they transferred us up to Minneapolis, Minnesota, to the head office, Lake Minnetonka. So my dad was a Cargill guy, right? He learned how to trade cash grain through Cargill. He went through the Cargill indoctrination almost, right? That was back in the day when they only recruited once a year. So if you started work for them in 1962, you were the class of 62 forever. There wasn't a bunch of other hires around the year. So they brought everybody in at once, and they put them through their program at once. And it was I think it still is a very good program, but it's a great place to learn how to trade the markets, both futures and cash in one spot. So having said that, he did well enough that they transferred him again from Minneapolis to Chicago to open up something called Cargill Investor Services, CIS. They're no longer around, but Cargill Investor Services was there to manage the fixed income and interest rate risk of all their big grain customers. They also did grain as well too. So a fairly decent background as far as when it comes to grain, but we also bought a family farm in 1970. And that's where I got, really interested in the land and acreage and the likes. And we also had 150 head of cattle we milked twice a day. We had corn and beans. I didn't live on it per se all the time because we still were in the west side of Chicago here, but it really got my taste and flavor going for the business. And so when I got out of university in 1988, I was just on the heels of a stock market crash of 1987. So there was no jobs going. I had to take a job as a clerk of the Chicago Board of Trade for $125 a week with a finance degree from the University of Colorado. That was, making everybody proud, not really. And so, but I learned how to trade options, right? They were there to teach you how to trade options. And so I went through the program, but at the same time, my father was wearing this jacket because he just wanted everybody in those visitors galleries at the Chicago Board of Trade to ask about why the guy's wearing a cow jacket, because my father really wanted to be a proponent of the exchange and let everybody know that we're actually setting it's an important economic function that's taking place down there. It's not just Las Vegas, right? We're actually setting prices for the food you eat. And by doing so, he had a little card made up for the guards and the people that would take people around on tours up in the visitors gallery. So when somebody would ask about the guy in the corn futures pit wearing that jacket, he had a little story to say about how there's actually an important economic function taking place. Anyway, so about that time that I got into the business, I did well enough at that little firm that they sent me to London right away in 1989. And I was there until 2002. I came back again for about 10 years and just got back after my second 3-year stint. So all in all, the last 32 years, half of it, 16 years I've spent in London. Not necessarily trading grain the whole time. A lot of times it's been interest rates, fixed income, and equities.
Sure.
But they're all related, like we said earlier, right? So you have to kind of know them all. And I have an agricultural background. So when I came back that second time, my father and I got to be partners for 1 year in the pit before he retired. And then when he retired, I started wearing the jacket. Well, about that time when he retired in 2002, we had a ton of money come to the business, right? A ton of hedge fund money. I don't know if you're old enough to remember, but there was the futures business exploded with fund money and hedge fund money. And so with that brought the media, CNBC, Fox. And so naturally they wanted to talk to the big guy in the cow jacket. So one thing led to another, and it really all exploded. I'm like an accidental tourist. I didn't mean it, but now it's the #1 brand in the futures business. And it's done me well over the last 15, 18 years because, you get to speak to people, you get to see a lot of people, and it's been a lot of fun too. So I'm very fortunate that I got lucky enough that I accidentally walked into it. But at the same time, there is a little bit of a, meat on the bone there. I actually did work on a farm. We have a family farm still. So it's not, I can actually say that I did stay at a Holiday Inn last night, right? I can walk the walk and talk the talk. So it's been a great time. I still hopefully have a lot of time left, but I really enjoy doing things like this, and you guys are doing a good job as well.
No, that's great to get a little perspective on your background. I mean, I guess your dad was a bit of an innovator, right? Because personal branding and being your own brand is kind of what the world's all about these days, right? And he was ahead of the curve on that.
Yeah, it's amazing, it's and he had that vision. He just didn't have he had the content, he just didn't have the distribution, right? Because the money and the TV shows hadn't started for our industry by then, or if they had, they were still in a very fledgling stage. But now, I've been the recipient of his innovation and because I have all the content, we have all the content on this end, right? But there's tons of distribution channels, and that will be whittled down. There's a lot of them. Everybody's got their streaming service now, but that'll be whittled down. But yeah, it's been this brand thing. Now you're right. That's what everybody talks about coming out of college. Everybody talks about how to build a brand. I think that's the hardest thing to do. And so I'm just lucky that the hard part's done, and now I get to sit in the chair and talk all day. But it's been,
Sure.
like I said, it's been a lot of fun, but it's very interesting. And boy, there's the great thing about this business is it's really exciting and there's no homework, right? I don't have to come home at night and pore over legal briefs and be a lawyer all day. It's like athletics. The game, the whistle blows at night, right? The game's over, but you come back in the next morning, you get to play the game again. So it's a ton of fun and it's never the same. And I think that's what's the best thing about it. You don't have to have a real long attention span to really be attracted to the business.
Yep. Yeah. So speaking of athletics, what position did you play at Colorado?
Well, I wasn't very good. I was just lucky to be on the team. But right now I'm doing an imitation of me playing college football, sitting in a chair. But I was I was a nose guard. I made the traveling team, so the top 60
Okay.
every now and again. But I was right in the middle, over the center, and both of my knees have a long stories to tell about what that was like. But as a 54-year-old man, the toll it takes on your body. I can't imagine playing professional football. A lot of my friends did, and I can tell you that a lot of them can't lift their arms over their shoulders, or they've got back.
Really?
It starts to wear on you when you get older. That's for sure.
Yeah. Yeah. No, that's interesting, for sure. No, I played a little college soccer myself. Had a couple of ACLs done. I can only imagine what that's going to turn into in 10 or 15 years, right? I'm not necessarily looking forward to that, right?
No, just keep that good job. Those great benefits at Barchart to pay for all those surgeries, right?
So you talked about going to London a few times. Like,
Yeah.
what were some of the major turning points in your career, and maybe you could talk a little bit about the experience of being in Chicago and in the pits versus what it's like in London, and culturally, like what the differences are.
Yeah, well, I mean, riding a bike's like riding a bike. The pits were the same-ish. There was a little bit of an accent, obviously, and they did things a little bit differently as far as rules. But generally speaking, it was the same. I left the corn options pit to go over to short sterling, which is basically their Eurodollar.
Okay.
So I started trading interest rates right away. And I would say probably one of the biggest moments of my life in my young trading career was 1992, when George Soros and Stanley Druckenmiller took on the Bank of England and broke the Bank
Sure.
of England. I'm getting goosebumps talking about it right now because let's see, 1992, I was 26 years old when this happened. It was September. And the first time in my life, I've almost ever felt like fainting. My position was one of the biggest short sterling options positions in the city of London at the time. I thought I knew better. I thought I was better than I was. I left. I did okay over 3 days, but I never slept a wink over those 3 days. The adrenaline was so high because it felt like you were staring at bankruptcy every 2 seconds, because it was so
Sure.
absolutely crazy. And the only way that I can say you understand trading in a pit, and if a market in your pit is normally as tight as 2 bid at 3, like 02 bid at 03.
Yeah.
Over the currency crisis in London for those 3 or 4 days, we were routinely making markets of 152 bid at 173. That's how crazy it was. I mean, we just had no idea. So if anybody knows how to trade interest rates, we walked in on Tuesday morning and the interest rate was 10%. They raised it to 15% and then put it back down to 10% by the end of the day in one trading day. So I tell you what, I can't believe I lived through it. It was amazing. But so we had also the Asian contagion and all the other things that go along with it. I mean, it just seems like I was always on vacation when some of that stuff happened. And that was the difference. I mean, London was the center of, it still is the center of finance around the world. That's where all the international banks come. And there was so much competition with all the big American banks and big European banks. And it was just a really fun time to be there when that was all happening. And also, to be honest, it was on the forefront of electronic trading. In 1997, we closed our floor there. And so by the time I got back here in 2002, I had 4 or 5 years under my belt of only electronic trading, no pits. So it was an awesome thing to do, to come back and then walk back in a pit. It was like, not that I was kicking a lot of butt, but it was like going back and playing high school football again, right? I mean, instead of playing PlayStation, you could actually get back on the field and play soccer again. It's like, whoa, this is fantastic. So that was and I also got to be partners with my father. So we got to play around for a year together as partners. He retired, then I stayed in the pit again until they got rid of him in 2015. And then I went to London again for three or 4 years and just got back last year. So it's been a fun and great ride, and it's only been 32 years. I'm planning on making it 50. I have no problem doing it because it's still a lot of fun. So
Right.
it's interesting, and like I said, there's no homework.
So, what's your favorite thing about working in the industry? Is it the lack of homework, or is it the people that you meet, or what would you say there?
Well, because believe it or not, I was an art major at the University of Colorado, and I think that really helps me. I mean, I never got my art degree because I fractured both my hands almost at the same time playing football, so I had to drop out and go to finance school. Believe it or not, so I was a finance major in the end. But I like to look at the markets a little bit differently than most people do, a little bit more creatively, and I think that's done me well over the years by being able to take a little bit of a different view of things, maybe a 3D view rather than. But I think that because it's more creative, I think I just am not comfortable in the corporate environment where you're going to be in that guy's seat in 3 years' time making extra money, and then in 4 more years you're going to sit another seat up, and then maybe in 10 years' time you got the corner office, and exactly what the guy in the corner office is making now, so you can kind of project where you're going to be. I like having every year having no upside. I mean, having no limit to your upside. Sorry, so no limit to your upside. I think that's fantastic. I mean, that's terribly enticing and exciting to me. It also stinks because you can lose money too, right? Like my friends don't go to work and come back with less. I do sometimes. And that's just the nature of the business. If you want unlimited upside, you got to take the downside. But I love that part of the business because that's very athletic, right? You want to be in it to win it. Snap the ball. Let's go. Let's see what we're going to do and live with that decision. Because I've trained a lot of really, really, really intelligent people, much more intelligent than I. And I think that a lot of times they've frozen because they haven't been wrong all in their lives a lot, right? They barely ever are wrong.
Right.
Straight A's from Northwestern University, but they can't make a decision to get out of a position in a pit. And that's the great thing about this. What I think in this business is, sometimes you make a wrong decision so quickly, you can make the right one before anybody else realizes you were wrong at first, right? So you got a chance. So that's what I love about it. And, and I also like the creativity of the technology. I'm not a big fan of the algos, but they play a part. But it's all, to me, I think, what other industry is that interesting right now? I mean, I would say to a young kid out of college, absolutely give it a shot before you go anywhere else.
Yep. No, that's awesome to hear. It's cool to get your perspective on that stuff. I know I worked at a large high frequency trading shop for a number of years, and some of the environment there is a little bit different than in the pits. And my experience in trading is different than yours. And the way that stuff works is the P&L is not as volatile, right? I mean, volatile markets, you make money, and in low volatility markets, you also make money, but a little bit less. Certainly a different experience for sure. No, that's really cool. And everybody has their own, trading stories, right? You dealt with Bank of England and Asian contagion and all that stuff. And I had Volkswagen and Porsche, right? Volkswagen was it was a crazy number, and everybody got blown out of their spreads. And I sat through that, and I've had good days and bad days. But no, it's really cool talking to you and getting your perspective on stuff. Before we head out, you got any predictions for the market heading into the end of the year? Anything you wanna throw out there?
Well, it's hard with the USDA coming up tomorrow. I mean, anything can happen, right? And that's why I think sometimes commodity traders are better than anybody else, because you never know what you're going to get, from the government, right? But I think that the way these things are trading, to me, it smells like we're building the base to kind of move a little higher. So I'd like to think that would be happening for both corn and beans going into the year. I like your numbers you guys have, if they're right, and I think that they're probably closer to being right than not. I think that's going to be, supportive. I know that we still have a ton of product around, and it's going to be hard to get through that, and we're not seeing any inflation. But I just say a mildly constructive trade going into the end of the year. But I'm not saying it's going to rip your face off.
Okay. Well, there you have it. Scott Shellady, thanks for coming on today, and hope to have you on sometime in the future. But much appreciated.
No problem. Thanks.
Take care.
See ya.